All right. Good morning, everybody. So when it comes to what's on the docket today, it's kind of light. We don't have as much as we've had lately. It's more extraneous data and maybe a little bit of market sentiment too. So it is earnings week. It is the week, right? It's the week. Um, that impact really has more to do with what's going on than really anything else that we've got here. At 10:30, we do have the EIA report. So if you're looking for a little scalp at 10:30, you could focus on USO. You do get some proxy plays through steel, and steel's been having a pretty rough time of it. So, you could look at some steel names as well. But USO, I mean, liquidity wise, is going to be your greatest bet. And just remember, it comes out nearly every Wednesday. So, to kind of temper your expectations of what kind of move you're going to see today, just go look at last Wednesday on USO and the Wednesday before that and the Wednesday before that. You'll start to get an idea that, even if you do get a move, we're not talking, 2% plays. We're just talking about a small scalp that might lead into something else, right? We've been kind of weak on energy. I had a USO short on. I'd already closed it out though when we came into resistance. But yeah, we have that today, and we do have some auctions. And really, other than that, it's durable goods and just keeping an eye on the dollar, waiting on the Fed, really looking for anything that's going to give us some guidance. And yeah, market's coming up a little bit short. So let's take a look at what happened around the world. We can already see here on Finance Juice where they talk a little bit about what's going on over in Europe. Remember that after every market close, they're going to do a market wrap. So when Europe closes at 10:30, you can come in, and I think they're going to repeat Europe. They do Europe early for us because they know, we're coming in, getting prepared for the day. Europe's not closed yet, but they went ahead and did a market wrap. When our market closes, they do a wrap. They do a pre-market kind of snapshot. So every one of those, Hong Kong, Asia, Australia, when Australia is like the first one that opens, right? You think about Globex, before we even get closed at night, Australia is already coming online. So, just kind of follow the curve around the world. For you Weeple users, that's kind of cool. You have that global setup already. It's built into your platform. You don't even have to do anything. All right, so we did get a rebound after that significant drop yesterday. Not much of a surprise, right? 5-bar rule, we went more than 5, and a capitulation play on top of it. So big move down and a rebound right back up. But we didn't really get outside of the box, and we closed inside of yesterday's range. So now we're IX10 inside of this really big bar. There's a couple of things here. One, this is half of a bear sandwich. Two, this is like a tweezer bottom. And so yeah, I mean, we need more information at this point. Being IX10 inside this really wide setup isn't enticing, not even a little bit. So let's just kind of see how it unfolds. This push up should have taken the pairs down, and seeing the pairs down should have brought gold and miners and silver up. So we'll get into the charts in a little bit, look at the lists, but that's my expectation. So in Japan, didn't necessarily do what we've seen over in China. They're not linked like that. but it seems to be a little behind the curve. So yesterday, China had that big move down. Today, it rebounded and kind of came back up to where it was before the drop. Today, Japan gets that first big day down. So we'll keep an eye on how it closes. The lines that I drew, or the box that I have here, is still here from the other day. We'll see if we're going to get a nice Busby out of all of this, but we can see from how the wick is across the bottom here that there was unfinished business, some liquidity still residing at that level, and it took it back up. It's deep ended. All right, so we're looking at Europe, and it did yesterday before it closed at 10:30 our time, had that breakdown outside of the box, and we continued, but it rallied back up. So it's inside day underneath the box that we had drawn. It did finally leave the zone. I would caution a little bit of patience here, because oftentimes this box that I have drawn can be considered a draw. The name implies what it's designed to do, draw traders in. Think about how we were able to stay in this spot for so long. Buyers were happy and sellers were happy, and transactions took place, and nobody felt the need to reach higher or reach lower to get a position. And as long as that balance maintained, price just stayed right there, and everybody was happy. And what it does is it draws people in, hence the name draw. So if you're short, think about where your stops would be. Your stops would be up here. And if you're long, where was your stops? Your stops would be down here. So then you start building up more and more and more orders sitting on each side of this, and it's just drawing and drawing and drawing and drawing. So then what we see with price, and it's a nice little trick, is they'll raid into the liquidity first, and then they'll run it the other direction. So a raid and a draw. We don't know yet. Just like support and resistance, you don't know if it's a raid and a draw until afterwards. You don't know support is really support until afterwards, right? Once it actually did support something. Until it does, it's just potential support and potential resistance. Seems like nobody ever uses that word, but it's the key to all of it. Supply and demand is not potential. We identify that before we ever get there. Solid as a rock, no problem. Supply and demand versus support and resistance. All right, so here is spot gamma for the NASDAQ. It's the NQ and the NDX. And spot gamma for the SPX and the ES. We do have additional auctions today, 11:30 and 1 o'clock. After 1, you should be good to go for your 0-day trades. I don't see that you're going to have any real interference after 1 o'clock, other than, the normal everyday watch the clock, right? Can't stress it enough. Watch the clock. I'm going to make believers out of all of you. At some point, you're going to just be eyeballing the clock all the time. A few years ago, as a side note, I bought an application called Jigsaw. I rarely ever show pictures of Jigsaw. It took me a year just to figure out how to use the darn thing. And generally when I'm using it, I turn everything off so I don't get distracted. It's a big program with a lot of moving parts, very much like Bookmap, just a different brand. But after using it for a couple of years, I'm getting to the point where maybe I'm ready to start teaching others how to use it. So kind of keep your eye out for videos. Start digging into using Jigsaw a little bit more. even if you don't have the program Bookmap or Jigsaw or anything like that, learning a little bit of order flow certainly improve things for you and help you trade a little bit better. At the very least, save you from getting run over. So we can see volume today. It's a little heavier than the day before, which was a little heavier than the day before. It's picking back up after OPEX. Keep in mind that May 3rd, we do have the FOMC. It's the front and center topic for everybody right now. So as much as the volume is picking up, it's going to turn around as we get closer into FOMC. I used to believe that FOMC was volatility. And the event itself certainly could be argued that it's volatility. But as we approach FOMC, it is a volatility suppressor. We will see less and less movement, less and less volume, and the market will just kind of stall out as we get into Wednesday and the FOMC event. Kind of keep that in mind if you're holding trades, that it's on the deck. All right, we nearly had a touch. Maybe we could zoom in and see if we actually did touch it or not, but the ADR half at 40.89, we'll just go ahead and say we got there today. The ADR right now, average daily range, is 1.03%. Just round it and say it's 1%. So we had a 1% ADR. We've already tagged it. That was an inside day breakout, double bottom bear trap. Perfect. I mean, just textbook perfect. And I posted this, right, as it was unfolding, showing that liquidity was residing on the other side of this pivot point. That was the low of yesterday. We got down into that liquidity, was strongly defended, and Bob's your uncle. Away we went. All the way back up to VWAP with conviction and strength behind the move. The flows are still coming in. That's pretty significant considering what time it is. Probably want to look at finance juice and see what just drove this thing back up again. But we do have an MDP, a missed daily pivot. You can see how we have not interacted with the pivot point for the day. That is significant considering that more than 80% of the time a market does interact with its pivot point. So the fact that it hasn't should stand out to you a little bit. There's strategies that kind of go around that. They're not mine. I didn't develop them. You can search for them. Just search for the MDP or missed daily pivots on YouTube. You'll find videos. I don't trade it, by the way. I just want to point that out. The MDP, I don't trade that strategy, but it's a great perspective on the market, right? Just kind of recognizing whether or not we've interacted with that pivot and what that might mean going forward. So learning strategies isn't always just about trading them. We are underneath the weekly pivot, so we continue to maintain our bearish posture. There it goes. Looking out at the daily chart, we can see the unfinished business from back here. And until we drive down through that zone and close on the other side of it, we have to continue to believe that there is still a lot of traders willing to defend at this level. And think of anybody who didn't get filled yet looking for a chance to get filled. It's one way to consider it. Especially with that candle right there. So we need to clean up all of the liquidity down at these lows. 4091 is a significant pivot point. I've been through it multiple times this year. 4100 round number is always a powerful pivot. And then keep track of the moving averages, right? Where's the 10? Where's the 20? We're going to get into the 10 here in a minute. But whether we're above or below, and are we going to hit it today? On Thinkorswim, if you type in the word daily when you're looking for indicators, you'll see that there's something called a daily SMA. It's giving you a chance to see the daily moving average on your intraday chart. So kind of being able to ask the question, where's that 20-period daily moving average? We interacted with it yesterday and we're still below it. If we drive to the upside today, we have to be aware of where that 20-period moving average is. Right now, it's at 41.41. So kind of keep that in mind. It is going to be a part of the resistance in the move up. If we're looking for a surge play, the 4-period moving average is right about at the cog line and the Globex low of yesterday. So confluence in pivots. 41.31 is what I'd call it, just for some easy numbers. The cog line. It's going to be a significant issue to get through that level. But if we do, it'll be a surge event. You get your momentum play. All right. So cog line 41.31. Easy enough to remember because it's yesterday's Globex low. 10-day, 30-minute volume profile. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. We are at the lows right now. Air pocket. We fell through it, and notice how price moved here in a straight shot, like a waterfall. It wasn't price trending with two-sided price action and clean price moves. It was just stone cold drop. And there was nothing here to help it out. There wasn't any real volume or anything like that, right? No structural support. But we are now looking at a classic H pattern. Peter R likes to say that this is an acronym. H stands for hell for shorts. How he gets all that just from the H, I don't know, right? But basically it's a bull trap, or excuse me, a bear trap, a bull trigger, and you're looking for the rebound play. This is a classic double bottom, by the way. It's exactly what we want to see in a double bottom. Sets the low with a pivot and a 2-bar reversal or a tweezer bottom. So strong, significant rally off of that low. And then the next time we see it, we overshoot it, get all the bears excited, they pile in, spike it against them, make them puke, and them buying the close adds to the catalyst and the buying, and you get a hard drive back up off of that low. I like it. So what's the takeaway from that? Don't put a line on the chart and expect price to tap that line, turn around and run the other direction and think that that's where you're going to get your trade. Liquidity resides on the other side of the pivot. Get the t-shirt, the bumper sticker, and the hat. All right, marking out the 5x5. Yesterday we made it through that VPOC. So we no longer need it. Go ahead and take that one off the table. We still have 40, 43. Both of these pivot points have been on the table for a long time. The one that I just took off, I think had been there a couple months. This one, I believe, had been there much, much longer. Oh yeah, that's not bad. Back to March. So 40, 43. It's worth noting this morning how little the volume represents down here, right? If we had hit, say, an iceberg or something, then we would have seen more volume on that. right? It looked like they tried to defend right around in here, that 4091 that I was talking about before. 4091 has a lot of history to it, and it gets defended a lot, but it wasn't enough, right? Didn't save them. Right, there's another reversal pattern. Oh, it's going to be a choppy day, ladies and gentlemen. We are more than 1/4% above the 10-week. So just barely above the 10-week. And looking at this, we're very close to crossing down below the 10. This indicator is a lagging effect. So you're better off looking to see if we've crossed the 10 by actually putting a 10-period moving average on your chart on a weekly time frame. But the fact that we're this close to the weekly means that earlier when I showed you how to put a daily indicator on your chart, you can also put a weekly indicator on your chart. Just go in there and put the 10-week on there and see where that thing is at. Aha, it's down here, 40.56. So we have not yet hit it. If we continue to drive to the downside, we will hit it. And you're going to want to know when we do. All right, so here we're looking at the market 1% below the 10-day moving average. So like I talked about a little bit ago, should we rally up, we're going to make contact with the 10-day. If we continue to fall, we're going to make contact with the 10-week. Both are levels that are worth paying attention to, because the one promise the market can give you is we're not going to stay here. So in the grand scheme of things, this is what it all comes down to right there, that box. We got to get out of it. I will offer the same thing that I offered the other day, 40.78. It's the low of this big bar from March 31st. We can fall down below that level as long as we rally back up on the week above that level. So a weekly close is what I'm talking about here. Do you have to wait till the end of the week? It's a question I get all the time. You said a weekly close, but does it have to actually be the end of the week? Well, I'll tell you, if it's Friday morning and we've fallen all the way down to here, do you have to wait for the end of the day on Friday to believe that we're going to get a weekly close below that level? No. Now, could it, rebound and run back up by Friday's close? I mean, yeah, it could, but the likelihood of it actually doing that is slim. So at some point, when we use things like daily close, weekly close, it's not like you actually have to wait until that close and then catch into it the next week. Just give a little perspective of where price is. If we're really close to this zone or area and it's Friday, you're probably going to want to wait. Just because you don't have a clear answer, you're going to want to wait. And if we're sitting all the way up here on Friday in the morning, probably a pretty safe bet we're not going to close below that line on Friday at close. So take the initiative to look past the obvious language of candle close on a weekly or a daily or whatever the strategy happens to be. So right here, the 40.78 is important. How we close on it for the week is going to be important, because we're really trying to answer the question 38.50 all the way down here, if that's where we're headed or not. And this week is the answer to all of that, because this is earnings week. It is the week, right? So it's make or break time. All right, Microsoft is going to be opening above this pivot up here, which is kind of nice. All right, so this isn't a daily chart, but it's kind of close to being a daily chart at their 12-hour candles. It's a little trick you can use on Thinkorswim to see, you know, pre-market price action on something that resembles a daily chart. So here we are with Microsoft and that move that I was saying and where we were going to close at. I think we'll just keep that around. So the thing with Microsoft today, an opportunity might be the Busby 292 on a pullback coming down and testing against this resistance. You have to be a little bit of concern on the move itself. We still have a market maker move of 3%. That's around $9.50. Now, if this was Apple, I'd say watch this thing run for a week, right? Apple's got a history of just going and going and going like the freaking Energizer bunny and not stopping, right? It exceeds everybody's expectations of how far markets can move. But Microsoft, it's not the same. So how much more we have at this point, kind of take it out to the weekly. What do we have? They have the August high as another level. And I wouldn't be surprised if we actually got into that already. 291.91. Yep, we went right through that too. So then there's the gap close up here. Just kind of walk these back level by level till we find, okay, gap closed. We're through that. And that leaves us with 310. There's really nothing else up there between where it is right now, 296, and I guess the pivot point would be the only one, right? So the pivot set last night in the afternoon hours at 302, right on the penny. It's what you got for Microsoft. So a break above 302 offers 310. I would be cautious trying to run this long today at this point, right? Think about how far it's already moved. And then ask yourself what the risk to reward here is. Is it more likely after moving more than $25 that it pauses here and or pulls back a little bit versus continuing to run even more to the upside? I would argue that it's much more likely that it pauses here. Let it pause, consolidate, regroup. And for the quarter, this is probably going to continue to be a great trade. So for the quarter, getting back up into these all-time highs, unless the Fed or something else comes along and whacks this thing down, we should see Microsoft continue to work its way back up. Google, maybe not so much, right? It's worth noting, by the way, that if Google was so bad, it would have crashed and burned. They've been very quick to just beat down a market that it doesn't meet their expectations. So it's not like they gave Google any kind of pass. So the fact that it's not crashed and burned, it's just down a minor bit, says that this still isn't done yet and easily has the potential to continue its upward move here, this channel, rising channel, no less. So on the quarter, I wouldn't count Google out yet either. Now, through the morning today, really kind of keep your eyes on the market's digestion of this information, right? There was a lot that came out. Some companies will report at night and then, or they'll put the numbers out at night and then the next day they'll do their report in their conference and they'll kind of expand on the numbers that they had put out the night before. So one, we want to be watching for that. Two, we do have morning earnings that are coming in. And then three, the market's still got to price all of this in. This is something that throws futures traders off. The market is open, the futures are moving. So why has it not priced in the news? The news came out, I seen price move. Didn't it price it in? A minor bit, yes. But at the open at 9:30, the market is going to price in the news from around the world from the 4 o'clock close yesterday until the 9:30 open today. All of that data and news and information still needs to be priced into the market. Even if you saw price respond to an event or a news release or a comment made somewhere, sure, price responded there, but that doesn't mean that the market has priced it in yet. So price discovery at 9:30, putting all the data into the market. And there's a lot to unpack today between all the earnings and everything else from yesterday. It's the biggest earnings day yesterday, right? So there's a lot to put in here today. Approach with caution. Consumer discretionary's got volume sizzle, oddly enough. Or just, no, it's just regular sizzle, not volume sizzle, excuse me. All right, so this is a nice breakout here. We got an island gap. We'd be looking for an island reversal now, and the reversal, to make this an island reversal, is that it can't grind its way back down. It needs to gap down. It's not down enough yet, but we do have a market maker move. We're continuing that breakout from a few days ago. We can see that, right? Continuing 2 days ago. Upside momentum with a neutral impulse at this point. Bitcoin is up 5% this morning. GBTC, which we often, very, very often don't even see get any liquidity in the pre-market, is up for more than 4.75% today. So all of your Bitcoin proxy plays, Coin, Mara, Riot, all of those are very likely going to get some love today. But if everything flips, those are going to get whacked first, right? They're up the most. So be very cognizant of that, because if everything turns, I'm shorting these things. They're going to be my target. I'm going to attack them. They're the ones that have gone up the most, so they have the farthest to fall. And, you know, relatively speaking, they're cheap and they're liquid. Coin, you know, is not really looking too impressive this morning, but Mara and Riot look good for a short. Again, if everything flips over, which we don't have any indications of that happening yet, right? Certainly not. All right, so it's obvious that we have an inside day breakout, but let's take that a step farther and look at it on the week. We're not inside week breakout for Mara. We got a 50% level at 997, and it's where we took our rejection here in the pre-market, right around that $10 mark, right? Round numbers. So 997 is the line in the sand. If we can get above that today, that's probably all we're going to get out of it today, right? If we can even get that. Otherwise, that is the perfect spot for a rejection, and I would target 7.5, right? So getting below that 766. $11.42 for Riot. You can see how we already made it through there, and we have a Busby off of it, and the Busby held. Now the Busby only holds, or only owes us back to the top, so 1165. And I gotta say, I did say that it held, but that's ugly, right? So yeah, nice little scoop pattern. We made 100% of this up there. The measured move is complete. This thing is done. It doesn't owe us anything at this point. So that high at 1165, that's all. If we go anywhere past that at this point, it'll be based on its own merit, not based on the play so far, right? It has to earn its new levels from here. We do have a market maker move of 2.5% though, that we can add to Riot from its current location. And another 29 cents. that doesn't really bring in much. So 98 cents and 29 cents additionally from its current location. It's not bad. Since we are through that 1142, if we can in RTH rally up and break through this Globex high, then we could target nearly $14 in this thing. It's going to be difficult to get through 1272 though. So I would watch that for the next area of resistance. So with Bitcoin names ripping like that, you got to kind of look around and ask about, you know, the obvious semiconductors. So AMD is the first one that comes to mind just because of how weak, and out of the group, this is like the weak link. What? So with AMD, just getting back up through yesterday's levels is going to be hard enough work. We're at 85 this morning. So it can, measuring yesterday's low, just getting through the 50% mark would be significant. But I would back that off a little bit more and focus on this big candle back here from the 13th. We're on a weekly chart. So that's going to hold some weight. All right, 88.63, the 50% mark. And if you did want to drop it down, from there and focus on the daily, $85.41, which we're struggling with right now. Because of that big bar that we have to deal with across the market, it's not just AMD that has that big bar. Getting out of that bar is pretty much going to be all of the work for most of the market. All right, so here's PayPal, same thing, big bar from yesterday. It's got to work through all of that, but notice PayPal's not playing. It's not participating with everybody else. It's sitting down at the lows, looking to break through the after hours lows from last night. We don't have a candle close yet, but it's going to be what we're focused on. $70 would be my target in that, the round number. Look for an overshoot of this pivot point from March 13th. I know everybody loves NVIDIA. We've talked about this thing and talked about it and talked about it and talked about it. So we had that very nice close yesterday in NVIDIA. There's almost no wick on the bottom of that thing, right? And then the flip over. So right back up again. And we're nearly, well, we were nearly back to where we opened yesterday in NVIDIA. So at this point, that's going to be the pivot point you want to focus on is yesterday's open. Call it 271. And then the high, 272.60. Basically, I gave it a couple pennies. Oh, more than a couple. 272.50. This really looks like a capitulation move, right? Like everybody puked up all their positions and then the market snatched it up and ran it back the other direction. So we still got to see how it plays out. For now, 50% would be the line in the sand. If it's going to stay bullish, it needs to stay above that level. 263, 267.36 is the level it needs to stay above. Well, that new Bing just really helped Microsoft out, huh? I gotta say, I hate Bing. I hate Bing so much, but I do like that it has the Chat GPT built into it now. All right, I know TSM really doesn't look like it's getting much, but it doesn't, it's not going to get the same kind of liquidity pre-market as all the others. But I do got to say, it's not looking like it's getting any love here at all, right? So out of, MU, NVIDIA, TSM is not looking that good. AMD, right? Think of Texas Instruments is another one. When you run semiconductor scan, you'll get all kinds of names. You want to kind of narrow it down into different groups and categories. So Bitcoin's up, semiconductors are up. We're seeing a lot more out of that move index. That's some volatility for bonds. So it's something to be aware of, kind of keep your eye on. Emerging markets are up. So we would anticipate also that KWEB is up, although, there it is. So number 3 on the list, right? Or basically number 2, because GBTC is still Bitcoin. So if we were ranking these, Bitcoin is up the most. That'd be all your Riot, Mara, all of those. And then KWEB, so that'd be Baba, Baidu, JD, PDD, Billy. Semiconductors after that, and then your more general tech after that, with emerging markets bringing up the backside of it. Things that aren't doing so good, energy, including solar, but energy in general, nat gas, bonds, it's not looking so good. Real estate, also defensive, your reflation trades getting whacked again still. So right now we've got this very wide split between tech and finance. Generally on a day-to-day basis, we want to see those 3 risk-on sectors working together: consumer discretionary, finance, and technology. There are times always where we can see this split apart, right? And they don't work necessarily so well together. A lot more lately, we've been seeing tech versus finance, and we're really talking about the money flows, right? And finance, just think the S&P, tech, think NASDAQ. So if it's tech versus finance, it's like the S&P versus the NASDAQ. We need these two working together, not apart. Today, we've got a very large spread between what's happening in the ES and what's happening in the NASDAQ. The shape of the moves are the same. So like this rollover here, we had the same rollover earlier in the NASDAQ. So, they are moving well together, but look at their relative location compared to, say, yesterday's low. The ES is at yesterday's low when it made that double bottom. The NASDAQ was nowhere near that low, right? Because it really moved a lot farther when the reports on earnings at 4 o'clock came in yesterday. So we want to see these two get more back in sync again. It's not like we're expecting them to move up and down tick by tick perfectly in sync. It's more of that their pivot points line up. Generally, if you're going to break out of yesterday's high on the ES, you're also breaking out of yesterday's high on the NASDAQ, or vice versa, the lows, right? Kind of the same thing. But right now, they're so far apart in their pattern and analysis that we got to kind of see one of these give. So the ES needs a significant, strong rally to kind of get up into the area where it would match the NASDAQ, or the NASDAQ needs to get down around 12,840 to be more in sync with where the ES is. It's worth noting that even on a normal everyday basis, these things might move, 4 to 1, but price wise, percentage wise, they usually stay pretty close to each other. So the S&P is barely up at all, not even 0.25%, and the NASDAQ is up nearly 1% this morning. So look for this to change and for those two numbers to get closer together. They don't have to be lockstep perfect, but they should be a lot closer together than that. If they don't, it's not going to, damage anything. It's no big deal, but the moves might be choppy and hard to play. So if we see finance really get into the game and tech holding its own and continuing to run, then yeah, that'll be exactly what we want to see. All right. Or if tech gives up and rolls over and finance doesn't start to rally, but instead continues to fall, it'll look like that. Nice, clean signals. All right, so tech versus finance is going to be a big deal. We want these two to unite, have a unified message. One way that you can visualize that through the day, so up at the top of the screen, Thinkorswim runs multiple menus at once. The first menu is right there, right? So I'm talking about Market Watch. And then I'm talking about the next set of menus, Visualize tab. So once you're on the Visualize tab, set it to Index Watch. This only works during regular trading hours, by the way. So I'm going to do it, but we're not going to see anything. This is an advanced decline line when the market is open. The difference between this and bringing up an advanced decline line in the chart is that this has the capital flow. So you can see how many issues or companies are advancing versus how many are declining, and you can see where the money flow is. If there's divergence, you'll see it. Okay? More companies going down than up, but more money going in than out, that kind of thing, divergence. You can detach these and you can load as many as you want, including putting your own watch list in it, like just the FANG names. Right? You can do that and see where the money flow is in just the FANGs, which is nice, right? Because then you got a pretty good idea of what they're doing, which means you can also do that for specific sectors like financials, technology. Be careful today, guys. It's looking pretty choppy out there, and everything that we have just says bullish, but consider how far it's already run and how much more room it can go. Risk to reward wise, these are days that really hurt newer traders, because if it continues to go up higher than it's already gone up after hours and this morning, there's the risk to reward says it's trash, and that it's more risk trying to trade it higher from here than it is trying to either short it or waiting for a pullback. So be careful, be safe. I'll see y'all tomorrow.